Hello and welcome to Currency Call. I'm Manisha Gupta. Let's start with the euro, which has eased from its 7-week highs as the markets consolidate after a huge relief rally. Though further gains are eyed and the EU summit delivered a concrete plan to fight the debt crisis in Europe, though markets are still reading into the fine print. Right now, the euro on your screens 1.4150. Remember, we have done levels above 1.42 as well. The dollar has also recouped some heavy losses after posting its biggest one-day decline in more than 2 years. Traders believe that the dollar index is headed for more losses in the coming days. For now, it's come back again above 75 there, 0.3% of a gains coming in. The commodity currencies among the biggest gainers today, both the Australian and the New Zealand dollar are trading higher. In Asia, most emerging currencies also logged in gains as investors returned to risk assets. South Korean won, Thai baht, Philippine peso are riding higher. The Indian rupee also climbed to a 2-week highs and right now it's holding around 48.81, nearly 1.5% of gains coming in for that. Let's also go across to Abhishek Goenka. He is CEO India Forex Advisors and he joins us right here in our studios. Abhishek, hi, welcome to the show. After 2 days of holidays, rupee really has opened much on the higher side. Do you see these current levels sustaining?
I guess we need to take a fresh look at the markets because a lot of things have happened over the last 2 days holiday. Now, again, people are talking about that all the solutions have been figured out for the Europe. But there are 3 or 4 points that we need to consider. Number one is that if they are writing off all the debts to the extent of 50%, what banks are holding, where the money is going to come in from. Secondly, if they are recapitalizing these banks to the extent of 9%, again, the money has to come from either ECB. If the money is coming from their own governments, then definitely there could be a downgrade of these governments, again the same problem. And if the money is going to come from countries like China, who have got vested interest definitely to negotiate terms with Euro because it's one of the biggest trading partners with Chinese. So if these people are loaning in money or buying bonds, they're already invested around $600 billion. So like you see what happened in US they're already invested around $3 trillion. Now US, they're having a lot of problem in terms of artificially pegging their currencies low. So here if they're loaning funds to China, to Europe, they might have terms where they can artificially keep their currencies low to boost more and more exports. But again, it's a call from the Chinese that how much of the money they want to, how much of the good money rather they want to risk to the bad markets and the bad sovereign bonds of Europe. So that's again a question mark. So we need to wait and watch, I think, another 1 week or so till we come up with the fine prints of the entire things what have taken place. But I think there's still a lot of question marks on whether we can have a sustainable solution of this particular problem, whether the regions apart from the Greece, Portugal, Spain, Italy, whether $1 trillion is sufficient, and how do you raise $1 trillion? That's again a question.
But Abhishek, as of now the markets really seem to be rejoicing this euro and all the high yielding currencies including the rupee are on the higher side. How long do you think we can stay with this euphoria?
I feel rupee as of now, technically also if you look, the levels that we have seen in rupee is merely a correction. It's close to its 21-day moving averages on the weekly note. I think these levels is something which is possible around 48.60, 48.50 odd. But again, breaking a level of 48 would be a game changer for rupee, which I don't see right now. I think rupee per se has got its own fundamental problems which we have talked again and again. And I think those fundamental problems still we do not get solved. We do not see a strong appreciation in rupee. Even if euro moves up to 1.45, rupee comes to 48.50, something like that. But still I feel on a medium term note, there is not much buyers of the Indian rupee.
There has been an interest rate hike as well recently. How are you reading into that one and how do you see the course going ahead for the Indian economy?
If you look at the recent statements by the government officials, the RBI governor and all, we do expect, a lot of people, around 80% in the street is expecting that there may not be further hikes, and even RBI has given some indications. At the same time, if rupee is holding on to 49 or 50 and the commodity prices are going up, we have also seen the core prices going up, the food prices going up, and with the considering the exchange rate of 49.50, I think if the prices are still high, I think the RBI has to move on for another quarter basis hike, which is there is also possibility. I am not seeing a strong cut of interest rates, not before at least June next year. There is a speculation in the street maybe by March next year. We feel that June next year, because I don't think the price is coming down so drastically, and considering the dollar rupee exchange rate also. So I think markets have not taken that particularly very positively. I think Indian markets have went up because of the Asian markets and the European and the US markets, which has been roaring across. So I think the market needs to stabilize a little bit more because before we can get some positive sentiments coming up.
All right, Abhishek, we'll let you go at that. Thank you so much for joining us with all of your views on all of those currencies. So 48.5, watch out for that level as Abhishek is telling you. That could be a stiff resistance to break for the Indian rupee. With that, totally out of time on Currency Call. Thank you for watching.